Alright guys, so the US chip war is starting to collapse. It has been over 2 years since the US ramped up the tax sanctions on China, and it seems things aren't going so well. Now, a few weeks ago, Nvidia's Jensen went all the way to Beijing to essentially pay respects. He knew that the game was up, especially if business to China ends. Trump's new restrictions threaten that outcome, and it's important we see what Jensen saw about China. The real superpower of Beijing is the ability to take a lot of pain. It's that suffering that allowed them to push ahead through the sanctions and innovate ahead.
And to this day, I use the phrase pain and suffering inside our company with great glee. You know, boy, this is going to cause a lot of pain and suffering. And I mean that in a happy way. Because you want to train, you want to refine the character of your company. You want greatness out of them. And greatness is not intelligence, as you know. Greatness comes from character, and character isn't formed out of smart people, it's formed out of people who suffered.
So how painful were US punishments on Beijing? Now, China faced the most exhaustive list of chip restrictions that was meant to cripple their AI tech. And at the heart of this was the AI diffusion rule, preventing chips from entering global markets, and the fear was for China to somehow obtain the gear. Now, back in December, Biden imposed the chip restriction rule that threw China into Tier 3. They couldn't get the most advanced chips, except for the G7 and friends. Other countries were in Tier 2 as well, and that meant quality and quota restrictions. The big fear is for transshipment of chips through these countries to China, country XYZ buying chips for Nvidia and then selling it to China. But therein lies the problem. How is the US going to be a world leader in semiconductors when you decide to lock away revenue from the world? US tech firms might be leading today, but eventually China will catch up. And once they manage to manufacture affordable chips, the whole world will be flooded with them. Then the US will be fighting a global market that can innovate faster at a fraction of the cost. And it seems Lutnick has finally gotten the message, at least partially. The Trump administration is going to streamline the AI diffusion rule, basically to allow more chip sales to the world for companies like Nvidia to earn more revenue. Now, this is a good move and should have been done all along, but yet old tendencies die hard. Washington is still going to impose chip controls on countries that diverted chips to China, and there are reports that countries like Malaysia or Thailand, they are on the list. Now, this is horrible because you are still segregating the world in order to punish China. This isn't smart because you still have closed off big markets that will eventually turn to Beijing. The fact that Trump has to walk back Biden's curbs is a sign that the chip war is unsustainable. And if you think about it holistically, it doesn't matter if China gets the chips. If US innovation is so strong, then you need to sell to the world regardless of the risk. And of all the tech players in the ecosystem, only Nvidia seems to have understood the picture. You can't look down on Chinese innovation, or you'll suffer another Sputnik moment that goes beyond just DeepSeek.
The world's AI. Whereas American standards are being adopted around the world, the ecosystem of artificial intelligence will build on top of our standard versus somebody else's standard. And we are not alone. You know, Nvidia, of course, is the world leader today. But in our absence, if we don't serve a particular market, if we leave a market altogether, there's no question somebody else would step in. Huawei, for example, is very formidable, one of the most formidable technology companies in the world. They'll step in. And so the reason why it would make sense is to win in the marketplace, make the American standard the global standard, have AI be built on top of American technology, and of course, very importantly, it's a giant market.
Now that completely makes sense. If you don't get a foothold today, China will start selling chips tomorrow and replicate what they did with EVs to the global chip industry. There's a big misconception that all China has is affordable labor and a ton of money from the trade surplus. Both of these are true, but it goes much deeper than that. China today is trying to produce the entire semiconductor supply chain domestically. The company we hear the most about is Huawei, but it's the companies behind the scenes that really matter. From designing the chip to fabrication and lithography machines, Beijing is developing an answer to each of these segments. Every step of the way, from etching to packaging, the Chinese ecosystem is becoming more and more self-sufficient. And besides, the export controls of chips to China simply aren't working. And think about it for a second. If Russia managed to sell their oil under heavy sanctions, don't you think China can obtain AI chips if they really want to? There are a ton of middlemen around the world that will serve this gap in the market. It's like how India bought Russian oil, repackaged it, and sold it off to the EU. According to McKinsey, US export controls have not reduced chip exports to China. Things ramped up in 2022 when big restrictions were imposed by Biden. In 2023, heavy restrictions on foreign companies like ASML and Tokyo Electron were imposed. They couldn't sell any advanced chip makers to China. But look at the big rebound in semiconductor sales to China across the board, whether it's the chips themselves or the manufacturing equipment. We have seen this big rebound of shipments to the country. Over $15 billion of chips and their equipment still ended up in the Chinese market. And now, with Huawei's new chips and advances in lithography machines, it's just a matter of time before China catches up. Unlike Biden's chip war, Trump's new set of measures are bound to fail. Once again, Nvidia is sounding the alarm bells. Jensen admits that US firms locked out of the China market would be a tremendous loss. Unlike other industries, capital expenditures for the chip industry, they are insanely high. You need to keep funneling money into your industries to stay ahead of not just domestic competition, but international companies as well. Take Nvidia's R&D spending for example. It has been increasing every year, hitting 8.7 billion in 2024, but there has been a big drop-off in spending as a percentage of revenue. In 2023, Jensen spent 27% of the company's revenue on R&D, but last year it was only 14%. And with the latest $5 billion write-down they suffered from Trump's new restrictions, Nvidia is heading towards a crisis. They are facing a revenue problem, and unless they can sell to the world without restrictions, Chinese spending will eventually catch up, even if it's less effective today. The Chinese ecosystem still allows this research to be done more affordably, especially when it comes to brain power expertise. China doesn't lack that. And Jensen just made another point. The Chinese market is tremendously big. It's the biggest consumer for semiconductors. And if you lose out on this, you leave the doors completely open to domestic providers.
When we were limited to ship to China, the Chinese market in a couple of years is probably about $50 billion. The market we've left behind is utterly gigantic. $50 billion, just so you have a feeling for that number, $50 billion is like Boeing. Not a plane, the entire company. And so that's the business opportunity that I think we could enjoy, bring back tax dollars, create jobs, advance our technology even further.
Well, also your interaction with the customer. You're missing that chance to learn from that interaction from the customer.
The most important thing for any business is the interaction with the customer.
China is a very large market. It's probably going to be a $50 billion AI market in a couple of 2-3 years. It would be a tremendous loss not to be able to address it as an American company. It's going to bring back revenues, it's going to bring back taxes, it's going to create lots of jobs here in the United States. And of course, we just have to stay agile.
Now the US chip war is collapsing in real time, but Trump's new restrictions are just a half measure. In fact, he could actually ramp up the restrictions in a sudden U-turn. Nothing is clear anymore. But if that does happen, it'll be giving the future of the global market to China on a silver platter. And it won't happen tomorrow or next year, but in the next 5 years, it's game over for Western chips. But let's shift gears to a big lesson for global companies all over the world. It's a lesson not to be dependent on the US consumer market or any single market actually. You need options for your exports, and relying on just the US is a surefire way to build dependency. And for Toyota, they are learning the lesson the hard way. Japan's largest automaker, Toyota, just announced a $1.3 billion profit hit to their bottom line. This 180 billion yen hit came as a direct result of the Trump tariffs spread across just 2 months. It's a decline of more than 20%. In addition to that, their forward guidance has also collapsed. Operating income expected to hit only 3.8 trillion yen, a significant difference from the expectations of 4.7 trillion. For many years, automakers in Japan, they were relying on the US market for advantage. Now, this is a tariff market that keeps out Chinese cars, especially the EVs. They can't be sold in the US. Tariffs on them are easily 200% or more. But therein lies the problem. Because you're used to selling to the US that can take in a higher price car, the moment tariffs come in, you're screwed. The end goal is to force companies like Toyota to uproot and move their factories to the US. But will it work? Even US auto companies are suffering. Now, Ford is pulling away their forward guidance as well. They have no idea how much money they will make going forward. But what they are certain of is taking a $1.5 billion hit from Trump's tariffs. Even though some auto tariffs have been halted, import taxes on steel and aluminum, they are still in effect. So there's no reprieve for domestic car companies making vehicles in the US. Now, moving your factories to the US is a big gamble that the American consumer will recover. Because make no mistake, if you manufacture in the United States, that's the only market you can sell to. Forget about exporting your cars elsewhere. Is it still a good idea? Well, the stock prices of US auto companies tell us a horror story. Even after the tariff relief, Ford is still down. Since Trump took office, GM has collapsed by 15%, while Stellantis is down by over 30%. Once again, the threat of tariffs are turning investors away from the US auto sector. GM itself will see their earnings drop by at least $2 billion. That's worse than Toyota. Meanwhile, tariffs are going to cost them up to $5 billion in duties as well. Can they pass this to the consumer? Now, something tells me it won't be possible. They probably have to give further discounts to get consumers buying. Trump is hell-bent on bringing production back home. He might have reduced some tariffs on auto parts, but a 25% tax on imported vehicles will still continue, and here's why.
Pretty soon, sooner than most people think, because that's what other countries have been doing to us, just so you understand. They were tariffing the hell out of us. We couldn't sell cars in Europe. We couldn't sell cars in China. We couldn't sell cars in Japan or anywhere else. We couldn't do anything.
However, Japan also has another problem. Even if they relocate production to the US, there's still a crisis, and this revolves around the collapsing dollar. Now, the dollar has dropped by at least 8% from the February peak. During that same period, all Asian currencies, especially the yen, have strengthened against the greenback. So if Japan builds a new factory to sell to just US customers, they face more than just the initial investment risk or higher production costs. There's now the impact of a weaker dollar. If Toyota relies on yen-denominated profits, this is a very big problem. If they need to pay back yen-denominated debt back home, converting a collapsing dollar would mean less earnings in yen. And once again, you introduce a new risk of dimension, a new headache for decision makers. And now it's even less likely for foreign companies, especially those in Asia, to uproot production for the US market. You have the risk of US consumers weakening. They spend less and you earn less. You will also be trapped selling in a single place whose production costs will only get more expensive. Exports elsewhere will be impossible. Finally, the collapsing dollar is the nail in the coffin. Your earnings will be trapped in the US. You will be too terrified to convert back to your local currency if the dollar keeps falling. It's very easy for Trump to tell countries to shift production to the United States, but the US consumer market isn't bulletproof. There are still many big risks around. Despite the tariffs, building a new factory isn't that straightforward. But let me know what you think. Will the US completely dismantle the chip sanctions on China? And will auto companies really shift production to the US? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.